Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Doing deals. U.S. President Donald Trump secures more than $243 billion of business with Qatar on the second leg of his Middle Eastern trip, laying the groundwork for a bigger $1.2 trillion economic pledge. Flying high amongst the deals is a $96 billion plan for Qatar Airways to buy Boeing jets, which Trump says is the biggest order ever. And turning point, Syria's new President Ahmed al-Sharaa meets with the U.S. leader as the nations explore normalizing relations. Well, hello again, everybody. It's just gone 8 a.m. across the Emirates. I'm Joanna Bersachi in Abu Dhabi today. President Trump's tour of the region continues. He is in Doha this morning, expected to do a tour of the airbase there before making his way onto Abu Dhabi, which is where we are right now, later in the afternoon. So we're going to keep on with the coverage of President Trump's tour around the GCC. But kicking off the show now with a look at how markets are faring. What we saw yesterday was a marginal close higher in the green yesterday for Wall Street. The S&P slightly modest gains, but also at the NASDAQ ending up in the green as well. Today, there are signs that things are beginning to peter out a little bit. We're trading sideways. But what I should say is that over the past week, S&P is up almost 5%. So that risk-on rally continues. NASDAQ up 8% in the past week, seeing a lot of bounce in those chip makers, not least because of the support that has come through from those Saudi Arabian deals that are being inked and expectations that more deals on the AI front are going to be inked in the UAE in the coming days as well. So NVIDIA has jumped double digits in the last couple of days, AMD as well. We are going to be talking more about that with tech analyst Dan Ives later in the show, the implications of all these deals on U.S. tech names. So stay tuned for that. Also taking a look at the 10-year yield, we've jumped about 8 basis points in the last couple of days. So we're trading above 4.5% now. So keep an eye on that slow upward move higher in yields. This time people are less concerned, but still we continue to creep higher. And then oil trading on the back foot. This on reports overnight, an advisor to the Supreme Leader spoke to NBC in an interview and suggested that Iran are willing to forego developing a nuclear weapon in exchange for sanctions relief. So it appears as though the stance from the Iranian side is softening. That is having an impact on commodities. All right, let's move on and check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Avril.
Yeah, Jumana, after 4 sessions of gains, we're seeing the region stock slumping, and that doubt seems to be creeping in following this optimism about the U.S.-China trade truce, economic resilience in the U.S., following Wall Street slide. This is the picture in the Asia-Pacific for the likes of Japan, which is underperforming today. Some of it has to do with what we're getting in terms of profit guidance from the country's biggest lenders, including Sumitomo Mitsui, and it seems to be accounting a bit more for this tariff uncertainty. We have a number of other banks that are reporting out of Japan later today that we'll be watching. Even in China, where we had the JD.com earlier in the week, and then now following suit from Tencent, showing that solid profit. We're going to be watching out for Alibaba later in the day as well, but despite that sharp revenue growth, or a really solid revenue growth, I should say, you're looking at how tech stocks are still down. Korean won in focus as well among the currencies that are gaining ground against the greenback today.
Avril, thank you so much. Avril Hong in Singapore. Well, the White House president says, says President Trump has secured deals totaling more than $243 billion in Qatar, laying the groundwork for a bigger $1.2 trillion economic pledge from the Gulf state. The numbers keep getting bigger and bigger. For more, let's bring in Bloomberg's Paul Wallace. Paul, talk us through what is actual deal-making, actual numbers versus pledges and commitments, because the numbers are very flashy. They're very big. We're getting the 1 trillion figure from Saudi Arabia, 1.2 trillion from Qatar. How much of this is actual deals?
Ajuma, yes, you're absolutely right, and we're going to get more big numbers from the UAE either later today or tomorrow when Trump comes here. In terms of Qatar, I think the thing that is most tangible and most real is the huge order of Boeing planes by Qatar, well over 100 planes that it's ordered. Boeing's biggest order, the biggest order in Boeing's history. So that's the most straightforward thing. There are some defense deals as well, where Qatar will buy more military hardware from the US. That $1.2 trillion figure cited by the White House is a bit harder to work out. It's tougher to see exactly how they come up with that one. That it's essentially based on future estimates of future trade and so on. But regardless of whether some of these numbers are inflated or somewhat exaggerated, the fact is this trip has so far in both Saudi Arabia and Qatar led to a swathe of deals, and we are going to see even deeper relations between the US and those two countries, and also the UAE in terms of things like aviation, AI. AI has been a big part of it, and defense too.
Yeah, so deeper collaboration and of course a lot of those splashy headline figures. Let's talk about diplomacy as well. Yesterday, after the president met with the Emir of Qatar, he mentioned that the Iran portfolio had come up, and then later on in the evening there was an NBC story that came out saying that Iran had actually offered to agree to no further enrichment, i.e. to abandon their ambitions of developing a nuclear deal in exchange for sanctions relief. Is this a major deal, Paul?
Well, in some ways it is, but in some ways it is sort of Iran reiterating its stance. For a long time it's said that it is not going to build a nuclear weapon, or it has no plans to do that. But it's also said that it wants to be able to enrich uranium to a low degree, to 3.67%, and that's what's needed to build civilian nuclear reactors, power plants, essentially. And Iran has actually been quite consistent on those 2 points for several years now, but it's sort of re-emphasizing that with its public comments in the last few months, and as these nuclear talks between itself and the US continue. We've had 4 rounds, and they seem to have gone pretty positively. Both the US and Iran are saying so. There's still a lot of work to do and a huge amount to be done in terms of technical negotiations and working out technical details. But, there is a significant chance that we get a nuclear deal of some sort between Iran and the US. It is worth noting out, though, that Donald Trump keeps saying, and he's been consistent on this, if the deal talks collapse, then there's a high likelihood that he will choose military action against Iran and possibly target its nuclear sites.
Yeah, though he did say his preference is to make a deal. So let's see what happens there. Bloomberg's Paul Wallace, thank you so much. President Trump says the U.S. will explore normalizing relations with Syria's Islamist-led administration after meeting with its leader, Ahmed al-Sharaa. This follows a pledge by the U.S. to lift sanctions against Syria. These two decisions may spark fresh tensions with Israel, which has issued warnings about Sharaa's government and carried out airstrikes in Syria since the ouster of the former dictator Bashar al-Assad. Joining us now is Vittorio Maresca di Serracapriola, the lead sanctions analyst at Karam Shaar Advisory. Major breakthrough, I would say, for Syria in the last 24 hours. The fact that the president himself, the Syrian president, was invited to Riyadh. He had a one-on-one meeting with President Trump. The U.S. announcing that they're looking to lift sanctions. How significant a development is that, sir?
Thank you, Jumana. I think this is a pretty major breakthrough coming from the president himself, but we'll have to see what he really means by cessation. That's the word he used. And so we don't yet know the scope, and one layer of concerns has to do with the the gamut of U.S. sanctions on Syria, and a whole other level of concern has to do with counter-terror sanctions. So it's pretty unclear what Trump means by cessation, and it could be either read as a suspension, so we should expect broad action either that is time-bound or tied to some publicly outlined markers. And we'll have to see what action, if any, will be taken with respect to the FTO designation, the SDGT designation, and also other designation and sanctions that date back from 1979, such as the state sponsorship of terrorism one.
So it's still a slow unwind of some of these sanctions is your expectation. What do you think should be the government's first priorities, initial priorities, once it becomes apparent what type of sanctions relief the U.S. is going to be providing?
I think the sanctions that are the most that are hurting Syria the most are the ones that concern the banking sector. So the priority for the U.S. administration should be to lift those ones and try to work on how to really replug Syria's banking sector to the global financial system, because at the moment it still stands isolated. So this would be the first set of sanctions the U.S. government should work in terms of repealing. And then the counterterrorism sanctions are also very important in terms of blocking any type of contact with the new administration, because according to the Foreign Terrorist Organization designation, there's a clause within it that is called the material support clause that basically impedes any type of engagement with the new administration given its designation. So not only economic funds cannot be provided to it, but also diplomatic engagement and any type of contact with them is theoretically, according to the law, prohibited. So this is something really crucial that the administration should tackle as early as possible.
When President Trump made that announcement, he credited both the Crown Prince Mohammed bin Salman of Saudi Arabia and Turkish President Erdogan for getting him across the line. How big of a role do you think those particular countries and broader GCC nations are going to play in Syria's rehabilitation?
I think regarding Saudi Arabia, we've seen already its disposition towards repaying Syria's World Bank, current standing World Bank debt, so to allow for engagement with the institution. So Saudi Arabia, of course, as a Sunni country, has, let's say, not only material interest, but also, let's say, sectarian proximity to the new administration in Syria, and wants to establish or re-establish a presence in the country, as it is now doing in Lebanon with current engagements going on in the country. So that's for Saudi Arabia. And for Turkey, in a similar...
Let me just round up. Let me just round up with the final question, because I think many people were surprised to see this evolution of Ahmed al-Sharaa, who not so long ago was a jihadi fighter, now meeting with arguably the most powerful person in the world. The eyes of the world are going to be watching to see what this administration does, what the government's priorities are. Is it your sense that the government will continue to do the right things in terms of ensuring that minorities' rights are respected, and that there will be transparent and clean institution building from now on?
I think according to what we've gathered from the past months, this is what the government is trying to do at the moment. They have established a commission, for instance, after the killings, the sectarian killings in Latakia against Alawites. And also recently with the Druze killings, they've been trying to establish similar mechanisms to pursue the criminals that initiated them. So I think this is a crucial issue that the international community is following up closely, and that they know how important it is. So they're expected to, keep a strong stance on it.
Yeah. Vittorio Maresca di Serracapriola, Sanctions Lead Analyst at Karam Shaar Advisory. Thank you so much for joining us on the show. Now, coming up, hear why Dhabi Capital is still positive on U.S. tech stocks despite market fears that the AI rally has run its course. This is Bloomberg.
When you step back from the uncertainty and you look at where we are, we've got solid growth, solid labor market, and declining inflation. So we have ourselves in a good position to respond to whatever comes. Right now, the word of the day is patience. Patience to see, not guess.
That was San Francisco Fed President Mary Daly on the strength of the U.S. economy. Joining us now is Rashmi Garg, Senior Portfolio Manager at Dhabi Capital. Good to have you with us, Rashmi. I was taking a look at how the markets are faring this morning. Uninspiring session, I should say. We're starting to trade a bit sideways, even though we've come a long way in the past week for both the S&P and the NASDAQ. Are there signs that maybe this rally is beginning to peter out, that big rally that we got after the success of the U.S.-China talks this weekend?
Yeah, I think there would be a bit of a breather, but really what we have to look at is, what is the implication of, both the US-China trade deal as well as the recent announcements that we've seen. And then we have to triangulate that with the earnings that have been out. And I think overall, the picture is not so bad for US tech. What had happened post-Liberation Day was that, the valuations had really come down. There was a concern around valuations being stretched. There was a bit of concern around the sustainability of hyperscaler capex, and which is why we saw the huge sell-off in the U.S. tech stocks. Now with the earnings, with the U.S.-China trade deal, as well as the recent spate of announcements on deals that we've seen, I think there is some confidence which has come back into these stocks, and the valuations were supportive. It's very normal in a market to see a bit of a breather, and I think that is perfectly all right with the tremendous up move that we've seen.
What do you think is needed to drive the next leg up, though, in equities? Because we've had that big announcement, the fact that there's a Geneva mechanism, the two sides are talking, U.S. and China, but ultimately it looks like there will be some baseline tariff applied on both sides. From here onwards, what is going to be the next driver for good news in an environment where market participants are already pricing out some of the rate cuts from the Fed?
Yeah, so you're right, Jumana. I think the next things that we have to look at, we have some important events coming up. So I think the NVIDIA earnings and the commentary that will be made by Jensen during the earnings call, that is going to be very important from a tech perspective. And then, I think what has also happened is that, investors have been under-positioned in U.S. stocks, and, the fund flow has been happening towards Europe because, of what was happening in U.S. and in Europe. We saw this, fiscal largesse announced by Germany. So I think a bit of that under-positioning will be covered. So we might see a little bit of underperformance from Europe, and we may see some funds coming back to the US. And this is really what is going to happen in the short term. In the longer run, of course, we need to continue to see positive economic news, or otherwise we need to see some definite indicators which will push Fed towards a rate cut.
Yeah, well, later today, we're going to get a couple of those indicators, PPI and the retail sales figure is always important for U.S. spending. Let me ask you about something that you touched on briefly, which is the rally that we've seen back in some of these major tech stocks. Chip makers have been having a good run this week because of the announcements from the region that we are in, those deals that have been inked between NVIDIA and the Saudi AI platform, similar for AMD. Do you think that this is a game changer or really going to move the needle on some of these U.S. chip making stocks?
So I think this is more of a signaling mechanism. So far what we had seen was, under the Biden administration, the diffusion rule was announced whereby, there was a limit on the GPU, especially with the risk of these eventually getting diverted to China. So that clearly, with these huge announcements, it's very clear that Trump is not really serious about the diffusion rule, and that had been an overhang on these companies. So I think that is one thing. The second thing was, really people always look at the future when they're looking at equities. And it was really the sustainability of the revenue growth potential, especially for names like NVIDIA, which was a concern, and which is why we had seen multiple compression on this name. But with these kind of big deals, definitely, there is a little bit more certainty that you can take about, okay, there is this huge market. There are still countries which really want these GPUs. So definitely the demand is there, and we do not see in the near term, because these are multi-year deals. So, we do not see this demand petering out in the near term. So there is a vote of confidence as a result of these deals to these tech stocks.
If you look at the respective performance of U.S. equities versus European equities, S&P is basically flat. It's marginally positive again, so erasing the losses for the year. But Euro stocks is up 10%. If we were fast forwarding to end of 2025, do you think we're still going to be in a situation where European markets are outperforming U.S.?
I would say so. If we are talking about the end of 2025, I would expect Europe to outperform the US. However, having said that, in the shorter run right now, I would expect Europe to maybe show a little bit of underperformance for a couple of reasons. One, that we haven't really seen the kind of progress on the tariff deal with Europe as we've seen with some other countries, namely China, or some other countries like what we've seen in Saudi or in Qatar. So that is one reason. Secondly, we've also seen that the euro has significantly appreciated against the US dollar, and Europe ultimately is an exporting economy. So the exporters in the Europe will get hurt. And if we look at also the valuations in Europe right now, they're more fairly valued. They were at a huge discount earlier, but now they're more fairly valued. So in the shorter run, we might see some underperformance from European stock, but towards the end of the year, I would expect this to sustain for Europe to outperform the US.
Rashmi, great to have your perspectives on the show as always. Rashmi Garg, Senior Portfolio Manager at Dhabi Capital. Well, coming up, Zimbabwe is set to get its first dollar-denominated real estate investment trust, so REIT listing tomorrow. We'll have more on that later in the show. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Abu Dhabi today. The president makes his way over to Abu Dhabi later this afternoon. So we're keeping track of all of the announcements that are coming through from the region. Yesterday in Doha, another $1.2 trillion in terms of commitments, about $250 billion in terms of actual deals. But a look at the markets, you can see that we're dipping towards the red. As some of that momentum, the strong momentum we've seen in the past week, is beginning to die out, but a bit of stabilization, perhaps consolidation is due. We have both the S&P futures and European futures leaning towards the red. Coming up, Dan Ives from Wedbush says Trump's trip to the Middle East opens a new market for AI. He joins us next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Doing deals. U.S. President Donald Trump secures more than $243 billion of business with Qatar on the second leg of his Middle Eastern trip, laying the groundwork for a bigger $1.2 trillion economic pledge. Flying high. Amongst the deals is a $96 billion plan for Qatar Airways to buy Boeing jets, which Trump says is the biggest order ever. And turning point, Syria's new President Ahmed al-Sharaa meets with the U.S. leader as the nations explore normalizing relations. It has just gone 8:30 a.m. across the Emirates. I'm Johanna Versace in Abu Dhabi today. The president's tour continues. He is in Qatar today. He's going to be visiting the airbase at Udeid before making his way over to Abu Dhabi. He lands just after lunchtime, so we will be on the ground reporting for you with all his whereabouts. But for now, let's take a look at how some of these markets are faring. We had a moderately higher close for Wall Street yesterday, S&P and NASDAQ. But should be said, over the past week, though, S&P is up almost 5%, the NASDAQ up around 7%. So it's been quite the comeback. And actually, S&P has erased all of the losses for the year now. So we're back in the green year to date. Special attention on some of the data that's dropping. Later today, we have a PPI in addition to retail sales. So still more signals coming through on the U.S. economy. 10-year yields, keep an eye on what's been happening there. We are trading above 4.5%, so slowly creeping higher. But this time around, I guess good news is not such bad news for the bond market. People are less concerned about the rise in yields this time around. But should be said, we are beginning to move higher again. And then oil trading on the back foot on signs of progress with U.S., Iran, and a potential nuclear deal there. Let's switch over and take a look at some of those Asian markets because what we're seeing there is, again, signs that this rally has started to peter out. We've got the Nikkei down about 1%, Hang Seng down a modest amount, about 0.2%. But the big theme of the week, of course, and that has lifted the Kospi, has been the outperformance of chip makers, starting from U.S. chip makers to some of those Asian chip makers. And we're going to talk about why right now. So the Trump administration is clearing a path for Saudi Arabia and the United Arab Emirates to pursue their artificial intelligence ambitions. Under new agreements with the U.S., the two nations will get wider access to advanced AI chips from NVIDIA and AMD. Really happy to say that Dan Ives, Managing Director and Senior Equity Analyst at Wedbush Security, joins us now. Let me just start off by asking you, is this a big deal for the U.S. chip makers that you follow?
It's a massive deal because this opens up a whole nother opportunity in terms of a market. And I think it's one, like everyone knew Middle East was obviously going to focus on AI, but this has been groundbreaking, I think, what we've seen this week. And it's changed the paradigm. And ironically, who's watching this closely is China. Because guess what? You look at what's happened in the Middle East, they're almost ahead of China when it comes to where they are relative to getting these chips. China can't get the next-gen NVIDIA chips, but Riyadh can.
So the Trump administration has had to loosen the restrictions around those export controls introduced by the Biden administration. Lots of talk about those diffusion rules. Do you see this as the beginning of a rethink around national security concerns?
Look, well, I think, first off, a lot of those rules, and we've talked about it, I think they were outdated. And I think relative to the AI revolution, they were actually inhibiting a lot of the growth opportunities. I think that was smart in terms of what they ultimately did there from a diffusion perspective, because now it opens up what I view as sort of the next massive opportunity for a lot of these U.S. tech companies. And that's what we're seeing play out in real time this week.
And yet, there are still lingering concerns about who ultimately will get access to some of the technology in those chips. What can the U.S. do to ensure that the technology, the intellectual property, does not get passed on to China?
Look, I think it's a great question. I think DeepSeek was a moment that changes everything, right? I think after that, from a restriction perspective, from understanding where the technology is being used, making sure it doesn't get into the wrong hands. And I think this speaks to some of the things that we're going to see with a lot of these trade deals, even with the U.S. and China. But in terms of the Middle East, I mean, they didn't baby step into this week. I mean, this was a massive, massive week in terms of deals. And I think you'll probably see more of it, you know, as Trump hits UAE.
Yeah. So let me just bring it back to the macro, because the last time we spoke was, I would say, peak uncertainty around tariffs, trade war, the discussions between U.S. and China. We did have a so-called, that was a dark time, a Geneva mechanism agreed between U.S. and China over the weekend. How do you see the outlook from here? Would you say the worst is behind us now?
I think last time maybe I was even wearing a dark suit when I talked to you, right? I mean, the reality is that the Armageddon scenario got taken off the table. And now I believe we could start to see new all-time highs for tech as well as markets, because it comes down to like cooler heads prevailed. The de-escalation happened. And guess what? The AI revolution, it's not slowing it down. And that's now what we're seeing play out. So I think it's to get the popcorn out. And I think now we're going to start to see new all-time highs for tech.
What about the competition that's coming through from China? You mentioned DeepSeek a short while ago. Other competitors are also coming up with their own fit-for-purpose language models. How much does that dent the secular bullish story for U.S. tech stocks?
See, I view it different. I actually view it as bullish, because the better the models get, the more it's going to drive innovation, the more it's going to drive the use cases in terms of where the data is. That's why we're bullish names like Palantir, obviously hyperscalers, Microsoft, Amazon, and others. Look, Huawei's done some amazing things in terms of what we're seeing. They'll narrow the gap. But in terms of there's one chip in the world fueling the AI revolution, it's the godfather of AI, Jensen, NVIDIA.
Well, you know, a lot of those individuals were in Saudi Arabia earlier this week. Jensen Huang was there, but then also Elon Musk, a man that you have followed very closely for pretty much all of his career. And he was in the seat talking about Starlink, about SpaceX, about robo-taxis. Are you relieved to see that Elon Musk has gone back to his quote-unquote day job?
Relieved would be an understatement, because to see Musk there as CEO relative to as Tesla, Starlink, of course, SpaceX, he's not there for Doge. He's not there Trump administration. Look, and that's why Musk made a huge decision. He bet on Tesla. His days of Trump White House, in our opinion, are over. And that's why you're seeing, look what's happened to Tesla stock, because investors understand autonomous robotics, what's in the future. It was a fork in the road moment, and Musk made the right decision.
Well, Dan, I got to say, it's good to see that you're out of the dark place. You're back happy, smiling, and bullish again. And Dan Ives, Managing Director and Senior Equity Analyst at Wedbush Securities, thank you so much for joining us today on Horizons. Well, coming up, Ugandan Central Bank Governor Michael Atingi-Ego tells us about the biggest risks to the Ugandan economy. That is next. This is Bloomberg.
Next week, Bloomberg brings you live coverage from the Qatar Economic Forum. Bloomberg Horizons Middle East and Africa and The Pulse will be broadcasting live from the conference floor. Then, throughout the day, we'll bring you all the highlights from the key policymakers and market movers on the issues confronting the global economy. Live coverage from the 5th edition of the Qatar Economic Forum starts Monday, right here on Bloomberg Television. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Abu Dhabi today. Uganda's central bank held its key interest rate this week for the third straight meeting, citing an uncertain outlook. Governor Michael Atingi-Ego told us that more about the biggest risk that they are seeing to the Ugandan economy.
What's most concerning to us is uncertainty that is surrounding the imposition of tariffs. That discussion that is now going on globally. Today we are having this level of tariff. Tomorrow is a different level being announced. You are being given short-term horizons for that, so it could actually change. So now you don't know where in the long run this is going to be. And to the extent that we in Uganda are doing inflation targeting, we take a forward-looking approach to inflation of about 12 to 18 months down the road. So with this kind of information that is changing frequently and at a short time horizon, it makes it difficult for you to then make a projection over the horizon period that you're talking about. So that is really the biggest uncertainty that that we're seeing.
How does the bank then plan to respond if we continue to see these fluctuation in policies?
Well, certainly we are going to observe this for some time, and if it continues, we will then have to take some necessary action going forward, because we cannot indefinitely keep on hanging to this, because we need to conduct monetary policy. We'll have to make our own assumptions. But of course, monetary policy is best conducted when you have a reliable set of information, and because ours is data-driven, so that data also has got to be accurate to a large extent to help you make the necessary forecast. But if this kind of game continues, we will certainly then have to make our own assumptions.
What does that mean then? Dig into that a bit, Governor. The necessary action. What are some of these opportunities? What are you looking at?
Well, our outlook is subjected to all kinds of risks. The upside risks, and then there are the downside risks. So depending which risk dominates on balance, then we will have to take the necessary measures to deal with that risk that is dominating on balance.
Which would be what? I mean, let's just take, for instance, right now, I was taking a look at the Ugandan shilling. We've seen it weakening over the past few months and really a year. Is that something that you are looking at potentially responding to?
Sorry, did you say the Ugandan shilling is weakening?
Yeah, we've been seeing it weakening. I mean, it's stable right now since you came out with the announcement this week, but we have seen the shilling still weakening a bit. So is that something that you're looking at potentially intervening? What are some of the actions that you plan?
On the contrary, the shilling has been stable with appreciation pressures. Over the last, close to 1 year. So we have been having slightly, some appreciation pressures, and to prove that we've been able to buy sufficient, significant amount of forex from the markets. To mitigate even the stronger appreciation pressure that would have otherwise resulted.
That was Bank of Uganda Governor Michael Atingi-Ego speaking with Bloomberg's Jennifer Zabazaja. Well, Zimbabwe is set to get its first dollar-denominated real estate investment trust listing as demand for property stocks grows. Eagle REIT is seeking to raise $62 million from the listing on Zimbabwe's U.S. dollar-denominated Victoria Falls exchange. Bloomberg's Ondiro Ganga joins us right now. Ondiro, how significant is this listing?
Hi, Jumana. It's very significant because it's going to be the third REIT listing and also, like you mentioned, the first dollar listing. And dollar is preferable to the local currency because it's better at storing value and also showcasing value to investors. And we are seeing that investors are beginning to plow money in real estate in things like REITs to hedge their money against a couple of local structural and economic challenges like their currency, which has been very volatile. Since 2009, we have seen Zimbabwe roll out 6 cycles of currency, and their latest, the ZiG, was doing so badly against the dollar that the central bank had to step in and devalue it. There's also inflation and uncertainty around policy. If you also look at Zimbabwe, it's a heavily dollarized economy, which makes a lot of sense to put out a dollar-denominated risk. And also, the rates are more favorable in comparison to physical property, one, because they don't need the same physical management, they're easier to sell, and they earn investors dividends. And speaking of dividend, one of the 2 other REITs that has been listed will be paying its 10th round of dividend after it got listed in 2022. And these are just some of the factors that are attracting investors to things like REITs. So if you look at this market, there's some form of liquidity in the market, but there are also fundamental economic issues that have been there for so long. And so investors are looking at alternative places to place their money.
How has the property sector become a sort of safe haven of sorts for investors in Zimbabwe? You wouldn't typically associate property with being a safe haven, but I suppose there is a demand for real assets in an economy with high inflation.
Absolutely, Jumana. If you look at traditional asset classes like stocks, they're not necessarily doing well. If you look at the stock exchange, the all-share index is down 21% since September. And this is because we saw the central bank devalue the ZiG because it was depreciating quickly against the dollar. And we also saw them begin to tighten rates. As a result, there's a liquidity crunch. And so this money is not going into the stock exchange. Instead, investors are looking for alternative places to invest their money. If you also look at the economy in general. Gold prices have been surging in the international market. Exports from Zimbabwe have grown by 43%. And so you have local businessmen and miners who have this excess liquidity, and they're looking for a place to store their value. And because the stock exchange is down, they're opting for real estate. And we've seen the demand for real estate really grow. If you look at fund managements, they have increased their investment in real estate to 47% in the fourth quarter of 2024, from 43.6%. Uptake of property in leafy suburbs up by up to 12%. And these properties do not come cheap. They go for anywhere between $500,000 going up. And the demand is driven by also some of the fundamental issues in the real estate sector: security, water, electricity. And because this new property offers investors that, that's why we're seeing them gravitating towards them.
Bloomberg's Ondiro Ganga in Kigali, Rwanda. Thank you for bringing that story on Zimbabwe's REIT listing. Now for a look at some of the other stories we're following this morning. South African President Cyril Ramaphosa plans to meet with Donald Trump in Washington next week. They'll look to ease a diplomatic dispute that's been simmering since Trump accused South Africa of orchestrating a genocide against white Afrikaner farmers and seizing their land. Ramaphosa has repeatedly denied those claims. The U.S. is South Africa's largest trading partner after China, and officials in Pretoria have been working on a new trade deal to present to Trump. Former Credit Suisse CEO Tidjane Thiam has been re-elected to lead Ivory Coast's main opposition party. It comes days after he resigned from the post, a maneuver aimed at bypassing a challenge to his eligibility to fill the position. Thiam's leadership and ability to run in October's presidential elections were challenged in court due to his former dual French citizenship, which he gave up in February. And the U.S. is continuing to back the Lobito Corridor project that links copper mines in southern Africa to an Atlantic port and wants to replicate the concept elsewhere on the continent. The U.S. has already agreed to $553 million in funding for the stretch of rail running through Angola. There are also plans for a new line into neighboring Zambia and revamping existing tracks in the Democratic Republic of Congo. And coming up, President Trump and Qatar signed a $96 billion deal for Qatar Airways to buy Boeing jets. More on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Bersachi in Abu Dhabi. President Trump has said Qatar's $96 billion purchase of Boeing airplanes is the largest in the plane maker's history.
Kelly's telling me from Boeing that's the largest order of jets in the history of Boeing. That's pretty good. That's fantastic. So that's a record, Kelly. And congratulations to Boeing. Get those planes out there. Get them out there.
Joining me now is Bloomberg's aviation reporter, Danny Lee. Danny, I'm sure as an aviation, can I say geek, this was very exciting news for you. The largest order ever in terms of value. Just give us context of why this is so significant.
Yeah, well, let's just quickly run through the numbers. 210 orders and commitments and $96 billion worth of commitments there for Boeing. And when you look at the competitive landscape for someone like Qatar Airways, which already has around 210 aircraft, this order gives it a backlog of some in the region of 360 jets going forward. And when you look at the Gulf, you know, it's such a competitive marketplace in aviation for the wider world. You know, the competition with Emirates and Etihad. No, this is Qatar Airways being very aggressive as it looks to really cement its place in the world as a dominant aviation player. You know, despite being a small country, it has a lot of impact, and the impact on trade and the politics of trade, and particularly for aviation, there was this deal being done to make it the biggest in history. And just looking back at some of the numbers, you know, Qatar Airways up until 2010 until now ordered just 210 aircraft. This order overnight doubles that commitment, so it's a pretty hefty mark and one that really leaves something for the history books.
Yeah, though, as you say, there's going to be a massive backlog for jets. So that's going to be interesting to see, especially when Boeing actually deliver them, because that has been one of the major issues in the space. How much does this move the needle for Boeing? The stock has recovered a little bit this year, but of course has been set back by many woes and episodes over the last couple of years. Is this going to mark a turning point of some sorts for Boeing stock?
This is very much a turning point. I mean, when you look at the longer run, this is helpful. But yeah, since Boeing's April nadir, the stock has now rallied over 50%. So it's quite a 50%. So it's quite a turning point here in terms of this recovery. And of course, for President Trump, the focus is to try and save in as much as ways Boeing. And clearly, he hasn't got his jet, the Air Force One, ready. So there has been a bit of animosity there between Boeing and President Trump. But overall, the politics of doing business and the deals being done has really largely focused on aviation, and particularly Boeing has benefited from President Trump's deal making, particularly around tariffs, when the UK and Saudi Arabia also ordering from Boeing in some pretty hefty orders. So probably the backdrop is we'll probably see a few more of these kind of deals to come. Again, the question is, when will these jets actually be delivered? Because there is a bit of a strain on the aviation sector and on the manufacturers delivering these planes timely.
Yeah, especially with that 777X, which is part of the order as well. Danny Lee, thank you so much for setting the scene for us. Humongous order from Qatar Airways for Boeing that came through yesterday, a deal value of around $90 billion. Now, later today, Bloomberg will be live at JP Morgan's annual Global Markets Conference in Paris, speaking exclusively with CEO Jamie Dimon. That will be done by Francine Lacroix for his outlook on markets and politics. That is at 8 p.m. Thursday, Hong Kong time, 8 a.m. in New York. Now, let's take a quick look at equity futures. Things are leaning towards the red, a bit of perhaps consolidation going on in the space after a good run in the past week. Today, futures down about 0.2% for the S&P. The Dow also about 0.4% as well. European markets slightly trading underwater too. But that was it for our show, Horizons Middle East and Africa. I'm Jumana Bersachi in Abu Dhabi today, continuing with the analysis of President Trump's trip in the region. Stay with us. This is Bloomberg.